So standard deductions, it's based on your filing status, right? So you could be single, married filing jointly if you're filing with you and your wife, or married filing separately, and sometimes head of household if you're filing with a child and you're single. So for 2019 tax year, the standard deduction for someone who filed single, it was $12,200, right? But for 2020, they're increasing it by $200. So every year it gets adjusted based on certain criteria that the IRS use. But overall, it's a set amount that you get to deduct from your taxes when you file. So there's nothing special that you got to do to get it. Most people qualifies for it. But you want to know, okay, whether to use that or to use the itemized deduction, because a lot of times the itemized deduction can be a lot higher. So for example, so if you're if you're married filing jointly for 2019 tax year, your standard deduction will be $24,400, right? But let's say you have a mortgage and you have high expenses, like for your kids as far as hospital bills, and then you have a few other deductions that you can claim that get you more than the $24,400. So in that case, it's always better to use the itemized deduction, but you also need to have what I said earlier. You need to have records. You need to have the proper documents, because when it comes to itemized deduction, the IRS knows that it lowers your tax liability, it lowers your tax bill, so therefore they may ask you questions. So that's why you gotta have the proper documents in place.